Hello traders, welcome to another trading video here in Rubber FX. And in today's video we are looking at order block and order flow. Order block and institutional order flow. Into how do you put these two in your favor to have a higher win rate and higher win percentage. So that's what I'll be going through in this video, and I would like to use this time to let you know that every week here in Rubber FX we do weekly workshop, and it's strictly for the mentees and those in Dragon Super Low. So check the YouTube join button there and then select Dragon Super Low to be part of this weekly workshop. We cover a lot of things there, and there's some hidden gems that I release just for my mentees alone. Okay, so let's go back to the video here. And also, if you are new to the channel and you are seeing this for the first time, subscribe right now. Subscribe. Do not wait and check every other video, because I know a lot of people do that. They check my video and then check others, and then from there they subscribe. But you can subscribe to this video right now, because I can guarantee you that you have value just following this channel. So without wasting time, what is order block? Order block is simply a fancy name for supply and demand. But in this smart money space, I'll simply explain. It's simply a move, a manipulation move, okay, that manipulates traders thinking that the market will go in one direction, then all of a sudden the price reverses on them. For example, you can have a market moving up here, then all of a sudden people will think the market is going higher, then before you know it, the market reverses on them, then creating a change in order flow. Okay, so in this case we might have a series of candles. For a bearish order block, it's simply the bearish moves, the candles, the bearish move of the candle that produces recent high that leads to a change in order flow. Okay, the candle that moves up here, creating a recent high and thereby creating a break in what structure, leading to a change in order flow. An order block leads to a change in order flow. Okay, so that when price comes back, you identify your order block here, and when price comes back in, you decide to take the trade. Okay, so that is what an order block is. You have a bearish order block and a bullish order block. So for the bearish order block, we have a situation whereby market moves up, then all of a sudden we have a push down. So these two candles here, it could be three. Okay, most people will tell you that the order block is the last bullish candle before the breakdown. Some will say otherwise, but you should know that is a form of manipulation. Okay, so any bullish candle you see here is inducing people to buy. Okay, it's a trap, inducing you to buy, that you think the market is going higher, creating a new high, and from there it breaks, creating a break of structure, leading to a shift in order flow. So the order block there simply means these two candles here. But what do we do as traders? We simply refine. I keep saying this, we simply refine, because we are looking for the best risk to reward. So when price trades back in here, then we can take the trade and then target the lows, and hopefully we look for a reversal in trend. So that is an order block for a bearish order block. For a bullish order block is the reverse. We have a bearish candle moving down. Okay, bearish candle moving down, then all of a sudden we have the third candle, okay, taking out the lows here, creating a shift in market structure, which is also a shift in order flow. Okay, the moment you notice that, you find your order block. These two candles manipulated people to think that the price is still going bearish. Little did they know that the price reverses on them. So once you notice this manipulation, because trading smart money concept is all about understanding when the market manipulates people out of their trade, then the moment you notice that, it gives you a clue. The other block gives you a clue that it's time for you to join this train, okay, to take the price to the upside. So you wait for price to come back to your order block. Most people refine, but when you over refine too much, you might not get fill, okay, and price will move without you. So that is order block. If you want to know more on order block, I did videos on order block. I will link it up here for you to go and get more knowledge on it. Okay, now let's look at example of an order block. Yeah, in this case here, we have a move up. This O place here, this is an example of order block. This O candle is an order block. Okay, when price trade below it, creating a new low. Okay, when price comes back here in the future, you can decide to what, to sell from here. Okay, a good example also is here, the last bearish push to the downside here. By the way, this is a monthly time frame. Now let me go to a very more tradable time frame. An example of an order block, you can see this bullish candle went up. A lot of people thought this will continue, but what do I see? Market creating a new high and then went low. Therefore, when price trades back to that order block, that is where you look to get involved in the market. More examples here for the bearish order block here. We have this old level here. Okay, now if you mark out, that's why I don't really trade just the order block. There are more things I look before trading, but I'll give an example here. We have this push down. This is a manipulation push. A lot of people thought this will continue going lower. All of a sudden, we have a change in order flow here. So when price comes back in here, in this case, if I'm the one, I'll be involving this low as my point of invalidation. So price reacted, went up. Because the market is bearish, this was just a counter trade. Okay, can look for more examples there. In here we have order block here. Okay, price going up, this candle, then all of a sudden we have a breakdown, price returning back, you can decide to sell. Okay, so that is that. One more example, a good example is this move creating a high here, then this other candle created a change in order flow. So therefore, when price returns to the order block, you can decide to sell. So that is an order block, both bearish and bullish order block. Like in this case too, this is an order block as well. Okay, price came back, but in this case you can see you can be stopped out. So that is why you don't just trade order block blindly. Maybe I will do a video why your order block keep making you lose money, because there are other things you need to put in confluence with the order block. So let's go and look at the institutional order flow. Now the next question is, what is institutional order flow? Okay, institutional order flow is simply the market moving in a particular direction. The market, institutional order flow is simply where the big banks is moving price. Okay, institution represent big banks. Okay, order flow represent the directional buyers. Where are the institution taking price to? That is the institutional order flow. If the institutional order flow is bearish, okay, that means the low liquidity, that is the lows, are being targeted. Okay, the lows are being targeted. So for a bearish institutional order flow, you keep targeting the lows and keep protecting the highs. So when it comes to bearish institutional order flow, what you need to put in mind is, when you look at the chart and you notice that the lows are being taken and the highs are protected, then you have a bearish institutional order flow. So with the institutional order flow, we are concerned about, for a bearish institutional order flow, the lows are the target. The highs most times are being protected, okay, up until you have a change in order flow. Okay, a change in order flow is simply market being, for in this example here, going, you see the lows being targeted, then all of a sudden you see the high being challenged. When you see the high being challenged, then that should speak to you that we are having a change in order flow. That means the order flow wants to shift from bearish to what? To bullish. So you have to position yourself to get involved in this trade. Okay, so this is a change in order flow. Now for a bullish order flow. Now for a bullish order flow, okay, we have the market going, attacking the highs. Okay, the market only attack the high in the market. Okay, the trend, the highs are being what? Targeted, while the lows are being protected up until you have a shift or a change in order flow. So in this case, you can see that the highs here are being targeted. The moment you see this happening, you know that we are having institutional order flow being bullish. That means the market makers, the banks, are trying to take price higher to a certain level. When it gets to that certain level, okay, when they get to that certain level, probably area of supply in this case, then you see a shift in order flow, then that should speak to you that the market is willing to go lower. So how do you trade these alongside with order block? Remember, as I showed you in the example of order block, sometimes your order block will make you fail. Okay, you might identify order block, but you don't know that the institution still needs to push price higher. So with the combination of order block and institutional order flow going pari passu, you can stack the odds in your favor. So let's quickly look at an example on Aussie dollar here. Okay, let's look at the example here. In this case, you can see this place here. Market has been going bearish here. Okay, have been going bearish. You can see that the lows mostly are being challenged, while the highs are not being challenged. Apart from this, but price took some liquidity, then decided to go lower. Okay, most times the highs, okay, being created are not being challenged up until this point. You see, at this point here, you can decide to call this a change in order flow, but what happened, it didn't last long. Immediately we have another change in order flow. Now listen, this low creating a high, creating a low, creating a high. That means these highs are being targeted, then all of a sudden this low was challenged. So this is a shift in what? Order flow, a change in order flow. Price return back to a supply zone. Okay, then we have the continuation of the bearish institutional order flow. Now let's look at from this point to this point, what can we notice? So we can see this high created this low created this high. Now this high became target, okay, after price must have tapped into a supply zone. In this case, this is the order block. This is the deceiving candle that led people to think this will be going higher. And you can see the moment you identify this whole place as an order block, you will be in the trade. But when you over refine, okay, you are leaving money on the table. So understand your level of order block. It starts from the manipulation move. Okay, and if you refine and price comes back to the origin here, good for you. But that is why I use conference. In this case, this is an order block here. Okay, but at the same time it's resting within a supply zone, which gives me good confidence to take this trade. Okay, so you can see this supply here created a shift in order flow. That means the order flow continues to be what? Bearish. Bearish in the sense that it's targeting the lows. Went up, target the lows, went up. This eye now sounds like an, whenever you see an eye being taken during a whenever you see an eye being taken during a bearish institutional order flow, it's simply trying to take more liquidity and probably fill in some form of void. Okay, like in this case, market went up, did not take the low yet, push up again, then before actually taking the lows. Okay, thereby creating what order block. You can identify your order block here. Remember, your order block starts with the manipulating move. Okay, so you include these two candles. Price came in and then went lower. If you refine to only this, you might miss this trade. Okay, so it continues again, challenging the lows. This is the new low created. Price move up into the order block. You can see how you are combining the order block and then the institutional order flow, because it's a form of continuation strategy. You can use it to build what your account by continuing the trend up until you see a change in order flow. So here you see order block here was created. Some people thought this might go up for some reason, okay, and then price moves down. Once you see this and you look left and you're seeing that the lows have been targeted, definitely it's more reasonable to go for a short than a long. So in this case, you go for a short here and you target this low, thereby creating a form of manipulation here, an order block here. Price came, took out this low by a fraction of a pip, okay, went back in. Now all this high that has been taken, I said, is only for inducement, okay, to get liquidity to validate an order block. What makes an order block strong is what, when you have liquidity feeding into that order block. I keep saying this so many times. So when you see this, and again, once you understand your concept of premium and discount, you will not be much involved in here whatsoever. So in this case, you wait for price to come into your order block here. Price coming to your order block, further creating a shift again in order flow from this bearish trend, because in lower time frame 5 minutes this could be a very super trend, but the moment you see a shift in order flow, you then start going short. So all of these, your order block. But take note of something here. When price got to this level, low, high, created, now you keep going short, but at this point here, there's no form of imbalance, so there's no point looking for a form of order block in here. That's for me. I don't know about you, but if you take a trade here, you can only maybe get excited for a few while and then price took you out. Now this is the point here. Now at this level, you should be still, you are to look for what? Short opportunity. But what happened? Market took you out. Now this is okay, because on the same time frame, we have a shift in order flow here. Okay, this high was then later challenged, another high was challenged, okay, another high was challenged, creating what? A shift in order flow. So in the future, when price comes back to this level, this order block for example, I'll be willing to buy, because this order block is a strong zone for a quick scalp, even though the overall trend is bearish, because this is the point of origin here. This is one of the point of origin. Okay, this is the point of origin. Your price might go back to the point of origin to continue going lower. Okay, so now the moment price shift its structure towards bullish, you can see now that the bullish order block becomes what? Effective. But in this case, we didn't get tapped in at all. We didn't get tapped in, so there's no trade. But if you go to a lower time frame, from this move upward, you will have seen a very clean order block where you can start trading off with the institutional order flow switching from bearish to bullish. If you don't understand, let me know in the comment section. And by the way, if you are enjoying these tips, make sure you subscribe, make sure you share this video to as many people as you can. Let them come in and see what we are cooking in here. Okay, so that is that. Let's see if I can look at another example from pounds USD. Let's go to 4 hours. So let's start from here. Let's start from here. You can see that the market has been bullish. Okay, we have a bullish order flow here, a low creating a high. In this case, the highs have been targeted up until we have a shift in order flow. The moment you have a shift in order flow, that means the lows are now your target. Okay, and you trade alongside with other blocks. Now, secondly, you need to understand a bigger picture. This move here, though it looks is a trend, but it's simply a form of retracement, because for the past few months now, we have been bearish on the pounds USD. So now when there's a shift in order flow from bullish to bearish, which also goes in line with the overall trend, then we have a trade in our hands. So in this case, we have a shift in order flow. This is the highest high. The low that created that high has been taken here. So all of this move up here is simply your order block. Okay, and I said your order block is also your demand zone. If you want to know more on demand and supply, I'll keep a link in the description, or you check up in this card to learn more on demand and supply, because the market moves based on demand and supply. Well, whether you call it order block, whether you call it breaker block, whether you call it whatever you call it, is simply demand and supply. So now price went up. You can, and I said, once an high gets taken, you don't need to get panic. In case you enter the trade whatsoever, don't panic. It's simply a form of liquidity. You do not understand liquidity, and that is why price took you out to fill in more orders to push this down. Now in that case, this lows was what? Taken, creating a form of what? Order block. Now some will say, is this an order block? This is an order block, but it's an hidden base. Okay, order block in the sense that a push higher manipulation, buy to sell, is an order block. Okay, a buy to sell, whatever analogy I'm showing you here, if you go to a higher time frame, it looks this way. So in a 15 minutes, this is an order block. I don't need to go down there. Price came back in, trade below. Now you can see all these highs are simply inducement. Okay, are simply inducement. Now we might have taken some form of losses here. Okay, we might have taken some form of losses here. It's normal, because this is a good zone for you to start looking for buy. It's a normal thing. There's no perfect strategy. Okay, so let's continue. Now your target is this low. We are targeting this low, because when the order flow is bearish, you target the lows. So price went higher, okay, then continue moving lower. But before it did that, it built some form of liquidity. Okay, we have liquidity here and liquidity above. Okay, now grabbing liquidity here and creating a change in order flow within the trend, within the internal structure within the internal structure, you can zoom into a lower time frame to catch the move from here to the downside. I'm not going to do that here. Okay, price taking this internal low, the bearish internal low, creating an high. This is an order block here. Okay, this is an order block. Buy to sell, price tap into the order block, creating a low. Then we have another order block here. Okay, price come back in. You take your shot from here, targeting this low, because bearish institutional order flow, you are going for the lows. You are targeting the lows, and then this low was taken. Okay, price came up. We have several other blocks in here, but price decided to respect this one, and hidden base is also an order block. Okay, as I said, order block is form of supply and demand. So if you are struggling with order block, just go watch my video on supply and demand, which I will keep up here in the card, and have your knowledge broadened. Okay, so in this case, price came back in, creating a shift in order flow. You can see, and then this order block here, which is visible, you can start to take the trade of this to target this low. And you can see that the lows continues to be what? Taken, because the order flow is still very what? Bearish. It's still very bearish. Okay, came up creating new low. Now in this case we are challenging the high, so we can expect this order block here, a sell to buy, to push price to the upside because we have challenged this high. Okay, this is a major high that created this low, and then price simply went through it and even at the close. So therefore it makes sense to start looking for buy. You can see the way I'm combining order flow, okay, and order block together. When you combine your order flows, you understand where the market is going to just by simply looking at the high and the lows. When the highs are consistently being taken, then we have a bullish order flow. When the highs are consistent, when the lows are consistently being taken, we have a what? Bearish order flow. So in this case, we have a bullish order flow, and then you can see further highs are being what? Cleared. Okay, but we have this point of origin up here. Okay, and then this also has been untapped. So probably if price trade back even this level here, is what I'll be looking. If price trade to this point, you can go all of this high that's been taken. You don't need to panic much, as simply form of inducement for this ones to move, because this has not been mitigated. Okay, so probably price is trying to seek higher prices. That is why the order flow shifted from bearish to bullish, and that is your directional bias. If you have any question, put in the comment section, and don't forget, join the YouTube membership Dragon Super Lord, so that you can be having that privilege to be part of the weekly workshop we do here in Rubber FX every week. Now if you want to understand more on liquidity, I'll see you in this video.